Welcome back. If we haven't met, my name is Jay Dyson. I'm a realtor with eXp Realty, and I help first-time homebuyers just like yourself navigate the real estate industry to leverage for your future. And today's interview is one that you are not going to want to miss. We are interviewing Alex, the Chief Product Officer here at Ourboro. Ourboro is a co-ownership investment program that will help first-time homebuyers with their down payment. They will help up to $250,000 or 15% of your down payment, which is truly going to open the door for so many first home buyers that have that obstacle of saving enough money for their down payment. The best part about their services is that this is not a loan. It's truly buying into the property, and they take back their investment when you're ready to sell. Win or lose, they are happy as long as you are happy in your home. But without further ado, let's dive into the interview with Alex. Welcome back. I am super excited to have Alex Kjorven, the Chief Product Officer here at Ourboro, sit with us and answer all of our questions about this, what seems to be almost too good to be true. And this was a big prompt on why I wanted to have Alex on the channel to answer all of our burning questions about Ourboro. But before we dive in, welcome. How are you?
Thank you. Happy to be here. This is right downstairs from our office, so it's perfect. It was quite the commute, but we made it.
The exposed brick in this building is like everything that I want. It's like everywhere. Right? It's gorgeous.
Yes.
I love it.
Yeah.
So before we dive in, Alex, tell us a little bit about yourself. What do you do here at Ourboro? What's a little bit about your experience, background? Tell us more.
For sure. Thank you for having me. I'm the Chief Product Officer at Ourboro, so I oversee the product team, which encompasses obviously the development of our core IP, the legal aspects of how we do co-ownership. The marketing team is also part of product because the two are so interrelated. The client experience team, so our co-buy specialists and our product managers that actually kind of the front-facing team members that works with our home buyers. And last but not least, I oversee our partnerships. So not only with our lending partners and other service providers, but our growing network of realtors and mortgage brokers.
Amazing. And how big is the team currently? Do you have like a rough head count?
We're just under 20 people.
That's a pretty good team.
We actually just added a new staff person this week. But
amazing.
Yeah.
That's awesome. So you may be asking like what Ourboro is, and in kind of the quickest elevator pitch, if you will, what is Ourboro and what are you all about?
The quick elevator pitch.
Yeah.
So Ourboro, we are Canada's first and largest privately funded provider of shared equity investments. So shared equity investments is something that's relatively new. Like I said, Canada's first. We're the largest company that's doing it. There are similar programs that are offered by the government of Canada, but essentially what shared equity is, it's an investment in a home that's not a loan. So for us, we contribute to the initial down payment in exchange for a share of the future appreciation on that property. And we emphasize that it's not a loan because we only make money when that property is sold and if it sells at a profit. So if that property decreases in value, then we're at risk of losing our investment. Unlike a loan where, the lender gets their money back regardless of what happens to the final property price. So it's a completely new concept for Canadians to kind of wrap their heads around because we're so accustomed to buying a home and having a mortgage, right? You have your debt and then you have your down payment.
Yeah. The first time that I heard about Ourboro and your services, I was the person like in the group that was like, yeah, but like, what about this? Or what about, like, it genuinely seems so, it's too good to be true. Mm-hmm. So I'm really excited to kind of talk about that a little bit more. So how does Ourboro work? So you talked about the fact that it's not a loan and that it's co-ownership. Mm-hmm. What is the nuance in that? What is Ourboro? What is it doing?
Yeah. And it's funny you talk about the skepticism because we get that. And I say to our team all the time, we remind ourselves that we can't take for granted the fact that we're new. And with novelty, there's naturally just a lot of skepticism. It's people's natural reaction to something that is new. So a lot of the work we do is educating the market and even those who may not even be our home buyers, referral partners, realtors, any real estate professional, the bank of mom and dad. A lot of people come to us because they heard about us through their parents. So we get asked this question a lot, just like what is co-ownership? How does it work? I explained about the down payment piece. So for Ourboro, essentially, we contribute to the down payment, but how we split that initial down payment, the down payment is what we refer to as equity, right? So how we split that initial down payment dictates our beneficial interest in the home. So say you're purchasing $1 million home. Currently, anytime you're buying a property over $1 million, you need a 20% down payment. So you need $200,000 for $1 million home. not very many people have $200,000 in their bank account.
It's
And to be quite honest, if you did, you may not want to put it all in one place.
Yep.
But so say you need a $200,000 down payment, you have $80,000 saved. So 80 out of 200 is 40% of the down payment. Ourboro comes in with the remaining 120. So we get you to that full 200,000, and then you did 40% of the down payment. Ourboro did 60%.
Yep.
So we then have a 40-60 equity split. So that number is really important. It's based on how much we each contribute to the initial down payment. And then later, when that property is sold, the difference between what that property sells for and how much mortgage is left, less what you've paid towards. So basically the difference between what that property sells for and how much the original mortgage was is the easiest way to describe it. That's the growth. That's a profit in that property. And that's what we share.
Okay.
60-40.
Amazing. And we're going to talk about what happens if on the chances we don't make profit. But I think that also was a huge question when I first heard about the service. So we'll dive into that in just a moment. So I think my instinct when I first heard about the services was I instantly thought of like lease-to-own.
Yes.
That
we
kind of
compare it
component.
to the thing that we're most familiar with, or
Right.
the next closest thing.
Yes. But I know now that they're actually very different. And can you kind of explain some of the differences between what you offer and what lease-to-own is?
Yeah, like lease-to-own or rent-to-own programs have been around. I mean, to be honest, co-ownership has been around. Like people have been co-owning properties with friends and family for, as long as people have been owning homes.
Yeah.
It's the idea of co-owning with somebody that doesn't live on the property and co-owning with that investor that's new. So rent-to-own and lease-to-own, again, have been around for a while, and there's variations of it. Like a landlord can offer you a lease-to-own program where portions of your rent is kind of held and it contributes towards ultimately the down payment if you do want that buy option later. But a key distinction with us is when you co-buy with Ourboro, the homeowner owns the property on day one, and you have a significant equity stake. So in the example I just gave, you would have 40% beneficial interest in that property, and Ourboro has 60% beneficial interest. In these rent-to-own programs, it's usually the other way around. You're not the owner, your landlord is the owner on day one, and then as you as you pay rent and kind of build up equity, later on at the end of that rent-to-own program period, that's when you purchase the property and you have title. So it's all about when you take ownership. Another key distinction with Ourboro is that the amount of equity you have in the property doesn't change over time. So whatever that initial equity split was on day one, that's the number. That's how we split the profit down the road. Whereas rent-to-own programs, you're kind of accumulating, you're building up your equity as we go. And so there's a lot of implications with that. Like how do you split risk, right? When you're not on title, your landlord is on title, they have more rights and control over the property than you. At the end of the day, you're still just a tenant until you own the property. So a lot of things like, we encourage people to look into and evaluate which product is better for them.
Very cool. So now that we know what Ourboro is and kind of how it operates, who is like the ideal client? Who was Ourboro made for?
There's we joke amongst ourselves. We're always like, Ourboro's the rich parents you wish you had.
Yeah.
So, but in all seriousness, our product is for those who don't have access to generational wealth. Like right now, close to 30% of Canadians that are buying homes, like 30% of home buyers are purchasing homes with the bank of mom and dad or financial support from the bank of mom and dad. For those who don't have that financial support, they're saving for a very, very long time or, have some other source of external capital. So, in November, a recent national bank study around housing affordability showed that it takes a family earning over $250,000 a year,
crazy,
over 26 years to save for enough down payment to purchase the average home in Toronto, which is mind-blowing. So, our product is for people who don't have $250,000, a $250,000 household income or haven't saved for 26 years to break in the market. So it is quite broad. But in terms of some of the finer criteria, we have this on our website so people can look, but you need to be a permanent resident in Canada. You're purchasing a property that's going to be your primary residence. So we're not in the business of helping people become landlords, to buy a rental property.
Yeah.
We really have quite a broad, a big social mandate of our company, which is to help people get into homes and break into the market where they otherwise would just not stand a chance to be able to access this vehicle for wealth accumulation. So it has to be primary residence. You need to have a minimum of 5% saved for the down payment. You have to have the income to be able to support a mortgage. I always say regardless of where your down payment comes from or how much down payment you have, it doesn't change how much mortgage you qualify for because mortgage is all based on your income and debts. And you need to be purchasing in one of our investment regions. So we're slowly expanding. We're actually, I mean, I don't want to date this podcast, but we're about to expand to Ottawa. We're currently in GTA and some other regions in southwestern Ontario. And last but not least, in terms of ideal demographic or ideal customer, it's somebody who's looking for their starter home, not their forever home, right? Because when you're sharing equity with a company, obviously the longer you co-own for, the more equity is building up in a property. So the more of that equity you're sharing. And we know that. Like, we can co-own with you for up to 30 years, but you probably don't want to co-own with us for 30 years, because at that point, there's so much equity that's built up that you're sharing with us. So we say, like, 10 years is a good timeline for when you think you might be wanting to move on to your next home. And to be honest, even if you think you want to stay in longer than 10 years, like 97% of first-time home buyers sell before year 10. Like, even if they don't think so, just like life changes, you know?
Yeah. I think this was one of the big pulls for being so interested in Ourboro, is because a large portion of our viewers and our client base is first-time home buyers, and day over day, the biggest obstacle into the real estate market. Everybody has the dream of owning property, but it's that down payment.
And they have the income too. Yes. They have a great income, and they're like, what have I done wrong? I've done all the right things. I've gone to law school. I've gone to medical school. How come I can't afford a home? So it's quite,
I think Ourboro is truly gapping a problem or an obstacle for a lot of buyers into the market, and it's why I'm obsessed with the program. It's amazing. All right, let's dive into the next 3 sections. So I've broken this down into funding, and then we're going to talk about buying, and then I have some questions in the selling realm. Sure. So specifically starting in the funding, part of the requirements to work with Ourboro is buyers need to use the Ourboro's mortgage lenders or their preferred lenders. Can you explain a little bit like the why behind that?
Yeah, for sure. I mean, shared equity is still relatively new. Like I keep emphasizing that. So it's new not only for home buyers and realtors and mortgage brokers, but it's also new for lenders. So we're, being early still in kind of the shared equity journey, it takes time for lenders to understand the product, to do their due diligence. We're at any given time, we're in the process with multiple lenders to be able for them to allow shared equity into their portfolio. But at the moment, the lending partners, like the banks that we're working with that provide mortgages, currently only work through mortgage brokers. So that's why when a home buyer comes to us, if they're not already working with a mortgage broker, we introduce them to one. It's just part of being able to access that lending product. We're definitely adding new lending partners. We have a couple that are hopefully going to be launching some partnerships that will be launching this year. Until then, that's just one of the ways to be able to access a mortgage.
Okay, and then from a competitive rate standpoint, because everybody is talking about mortgage rates and interest rates, are they competitive? Like, are they able to borrow from kind of the big A lenders? Like, is it all of the same function as your average mortgage lender that you're referring out?
Yeah, that's one of the things that's most important to us right now, is that we are able to give our home buyers the same options. Like, we don't want our home buyers to be penalized or have more restrictions on where they can get their mortgages because they're working with Ourboro. So as I mentioned, unfortunately, right now we have a number of lending partners that are wonderful. We're constantly working to add more. We're hoping to have some A lenders added to our portfolio this year. At the moment, it's alternative lenders that have been worked that they can get their mortgages through, and they're accessing the same mortgage that anybody else would. In other words, there's no penalty for using Ourboro. It's the same mortgage product. It's just the actual bank that you're getting it from. There's kind of limited choice at the moment.
Makes sense. And I guess speaking more towards the investors, because of course you have these silent investors working through Ourboro, why would an investor want to be part of this type of investment? Like, what's in it for them?
Yeah, that's one of the things, that makes our model quite unique, is we're kind of tackling the problem on sort of 2 sides. Yes, there's the innovation of helping homeowners get into homes, but we're also creating a pretty new and innovative financial investment product. So Ourboro pools, we manage an LP fund. So we pool capital from accredited individual or institutional investors, and we put those funds together and then we deploy them. I emphasize that because sometimes people think we're a matchmaking service. We take money from one investor and we deploy it into a specific home. That's not it. It's a pooled fund. So for our investors, these are institutions or individuals who would rather see their money go towards helping people get into homes and into homes that these homeowners have a vested interest in taking care of the homes and increasing the value. They'd rather do that than be landlords and have tenants in the property and have to like manage these properties. The return profiles are very similar, so the capital's working just as hard. Through the return on investment profiles are relatively similar. They get broader diversification across multiple properties, different asset classes, different regions. So the value proposition even for our investors is also quite compelling, especially as we're, making the case for the impact of our product. Like we are actually this month, February 2024, in case
Yeah.
this video is living in perpetuity. We're launching a 10-year longitudinal study in collaboration with the University of Waterloo and Conestoga College to track cohorts of individuals like renters, people who co-own with Ourboro, people who own by themselves over a 10-year period to understand the impact of how co-ownership changes the game for folks. So, as we kind of get solidified in our impact narrative, where we become very attractive for impact investors. So those who specifically want their profit-seeking capital, so money that they want to see earn a return, but also earn a social return as well too.
Very, very cool. And I guess like the loudest kind of thing I'm taking away from that is, of course, you could be a landlord, but then the landlord's responsible for like the wear and tear on the property. They're responsible for maintaining it. They're responsible for qualifying their tenant. Are they going to take care of the property? So all of those things are kind of moved aside because
you have homeowners that are living in the
Yes.
home that are just as committed to seeing the value of that property grow, not only preserving the value of the property, but like investing. So we have a lot of programs to support our homeowners who want to do renovations, as an example. Like we understand if you want to put money towards making an upgrade in the property that will increase its value down the road, we have a renovation credit program where you get a larger share of the proceeds when that property is eventually sold.
Very cool. And so we now know kind of how Ourboro operates. We know who's helping kind of invest in the background. We've talked a lot about down payment. Does Ourboro help with any of the closing costs?
Great question. So one of the biggest aspects of closing costs on purchase is land transfer taxes.
Oh, yeah.
So I will say, like Ourboro, generally, we do not contribute towards closing costs. They are part of on the purchase and selling side. The exception is land transfer taxes, because land transfer taxes follow beneficial interest. So in the example of Ourboro's acquiring a 60% beneficial interest in the property, you can expect us to contribute 60% of the municipal and provincial land transfer taxes, which could be significant, especially if you're buying in a market like Toronto, where you get double, you get hit with both.
Love that, right? And I think for first-time home buyers, that is something that is almost kind of like a surprise bill at the end.
It's significant.
Yes.
That's quite a bit. You think about saving all this time. You just made it in terms of the down payment you need, but boom, all of a sudden you need an extra 20 grand for like land transfer taxes or something. Yeah. On the sale side, the selling costs would be like realtor commissions, and those can be significant as well. But we also do have a selling bonus program where we say if the home has appreciated kind of beyond our expected returns, we don't, we want to be able to share that with homeowner, kind of like reward them. You've done a lot of it is just like market conditions, but you've done a really good job picking the property and also taking good care of it, that we got really great return on it. So we'll actually contribute up to 100% of closing costs on the sale, depending on how that property has performed.
All right, let's dive into the buying process. First, what types of homes do like style of home does Ourboro help with?
Any style. So detached, condo, like in terms of property type, we don't necessarily have restrictions. We won't do like triplexes and, for obvious reasons, because it needs to be your primary residence. You can't rent out more than 50% of the property.
Okay.
But from a property type perspective, it really, it needs to be a principal residence and in one of the regions that we're investing in.
Right. And I'm sure that you are following the real estate trends. We know that in January 2024, the market has already started to heat up. And I feel like every year that passes, that spring market just starts sooner and sooner. Mm-hmm. So in a competitive market, how fast can Ourboro assist buyers? Like, what's that turnaround process look like?
We can be pretty fast. I mean, we're sensitive, obviously, to the timelines of, when there's a deal happening, if there's multiple offers, generally speaking, we tell our home buyers, when you apply with Ourboro, assuming you haven't gotten a mortgage approval, like pre-approval or done anything, like you can say like 3 weeks, right? From applying to Ourboro, you'll go through an initial intake call with a member of our team. That can be booked the very next day.
Okay.
And then we'll send you to our mortgage broker partner or our lending partner to get your mortgage pre-approval. And then that's on you. Some buyers have all their stuff ready. They get their mortgage pre-approval within like 2 or 3 business days. Sometimes it takes them a little bit longer. So that it's hit or miss. It's more buyer dependent. But as soon as we get your mortgage pre-approval back, we bring you into our onboarding process. So that's a 60-minute meeting you have with our team where we walk you through the ins and outs of the co-ownership agreement, because it's super important for our home buyers to understand their rights and obligations in this new type of like ownership structure. And again, those onboardings can usually be booked within 2 or 3 business days after we get your mortgage pre-approval. And then it's like you're off to the races. You're house hunting. We do ask that if you're making offers on properties, there's some, instructions we have for realtors that are working with our buyers, but generally we want a minimum of 40-day closing. And naturally speaking, like the minimum usually is like 30 days anyway, but we just ask just a little bit extra because of some of the additional legal work that needs to go through, because you're purchasing a property kind of on your own, but you're also co-owning with Ourboro. So there's a separate set of documentation and transactions that we go through. But even still, like we've received offers or applications all the time from home buyers that already have a signed ABS and they're closing in a shorter term. So we sometimes can make exceptions. But yes, we can. Our team moves pretty fast, and we take a lot of pride in knowing that we don't want to be the bottleneck in any of this process.
Yeah, and as a realtor, I'm grateful for that. Totally. So you talked about starting the application at the beginning of the home buying process.
Ideally, right? Just like, you get a mortgage pre-approval before you go making firm offers.
Yes. If let's say we have a client who is pre-approved, we're ready to go, and midway through, maybe something changes, and Ourboro is kind of the fix for that. Can we do it mid-process?
Yeah. So that's what, like I was saying, we do get, especially referred leads, like realtors. We have a network of close to over 1,200 mortgage brokers and realtors now that have been trained on Ourboro and out there, like yourselves, like talking about Ourboro and introducing us to their clients. So oftentimes we do get these referral partners. They have a client. Their client may have heard about Ourboro but didn't think they need it. But then, their source of down payment falls through. And they're like, well, you know what? It's not so bad. I can still use Ourboro. In fact, I can get a full 20%. My mortgage doesn't have to be so high. So we definitely get home buyers when they come to us. They already have a signed APS, already have a firm offer. They're closing in a month or so. And that's still enough time for us to onboard them and kind of get all the documentation ready.
Okay, great. You referred to this before in a previous question. Rentals. So we want the primary residence to be minimally 50%.
So that's more of a CRA regulation,
okay,
right? For it to be considered a primary residence from a tax perspective, you can't be renting out more than 50% of the property. Yeah.
Okay.
Yeah.
So if I wanted to have a rental property,
you can. Yep. If you had a secondary suite, obviously it's less than the 50% of the footprint of the home. That's totally fine. And in fact, you will keep 100% of the rental on that. It needs to be in a proper lease agreement, etc. And obviously like legal rental suites type of thing. But yeah, that's totally allowed.
Yeah. We talk a lot about house hacking.
Yeah, that was a term I learned from you just today.
So if you're not familiar with house hacking is the idea of living on the property and then a portion of it is being rented out to help with cash flow and just kind of the overall expenses. And most house hacking strategies, you live in the property for minimally 1 year. So it's good to know that house hacking could be something that Ourboro supports.
Sure. Yeah. We haven't used that term before, but we just had a secondary suite.
Yes. Yeah. All right. Now let's dive in. Does Ourboro work with buyers who already have a mortgage on another property? So I think what if mom and dad wanted to buy a property for child? They already have a mortgage and a primary residence. Is that possible?
So our requirement, we don't exclusively work with first-time home buyers. We definitely have buyers that, have owned property in the past, or forever, it could be a divorce situation as an example, right? And they want to buy a second property. So we don't exclude non-first-time home buyers. In the example that you gave, if mom and dad are wanting to buy for their child, Those parties, they need to be on the co-ownership agreement. And so when you execute a co-ownership agreement with us, what it's saying is you're living in the property. It's your primary residence. So the person who's on the co-ownership agreement are the people that are residing on the property. We do allow for kind of a relative, specifically a parent, to be able to be on the co-ownership agreement with that child. But before we go to that, we would even say, okay, could the mom and dad be guarantors on the mortgage instead of being on title or on the co-ownership agreement? So there's ways around that, but presumably it's that child, whoever is living on the property needs to be on title and obviously on the mortgage and on our co-ownership agreement.
Okay. Diving into the selling portion, how soon can an Ourboro homeowner or co-owner with Ourboro sell? How soon is that possible?
Legally speaking, like the next day, if they want to. Like there's nothing preventing an Ourboro co-owner from selling whenever they want. And that's the nature of our agreement. We will never get in the way of you wanting to leave the property, even if it's underwater. Like even if the property is at a loss, we won't get in your way. And it's really important to emphasize because a lot of our model really is built on this idea of like shared incentives. So homeowners, we know that you're not going to, by choice, willingly sell the property at a loss, right?
Yeah.
So, and if you are doing that, it's probably because you really, really need to, or like for some reason that we should, for even more, like not get in the way of.
Yes.
So there's kind of that general principle. But if, obviously you wouldn't want to sell the next day, you want to, recoup your investment, etc. So, short answer is there's no restriction on when they can sell. You can also buy out Ourboro share or offer to buy out Ourboro share at any time during that 30-year period. But ultimately, 30 years is that line in the sand. Like our agreement terminates at the 30-year mark. So you agree that prior to then, you would have either sold your home or bought out our share.
Okay, great to know. And has there been times when Ourboro doesn't allow their portion to be bought out or a homeowner to sell? Like, what would be a situation where maybe we wouldn't be so supportive?
So in the buyout scenario, we actually like to think that we're a bit more transparent than even just co-owning with a relative. So if you co-own with a buddy, you have an agreement in place, you wouldn't be able to force your buddy to sell their share at any time, right? Like if the markets are down, you can't say, haha, sell me your share. We've got a deal, right?
Yes.
So we actually try and take a little bit of that speculation out. We don't want buyers to feel like, oh, if they're offering to buy us out, it's okay, it's going to be a negotiation. We don't know where we're going to land. So in our co-ownership agreement and in our documentation, we say, if that property has exceeded our return objective, so it's a specific year-over-year return percentage. If it's exceeded that, then Ourboro will be obligated to accept the offer. So obviously we go through a third-party appraisal process, and if that appraised value comes back to be above our floor for return, then we're obligated to sell our share. So that gives homeowners a little bit of predictability, right, around, if they've been in the home for 7 years, most likely, they've hit that benchmark. So they know, like, okay, I can exit kind of on my terms.
I love how transparent and open, even the website, it's very clear that it's meant to support, not hinder the experience.
Right.
So I love that. That's how transparent everything's kind of written.
We have an amazing team of content writers. Like a big part, like I said, I do not underestimate or value just being able to demystify what co-ownership is for the general public. It's a huge part, underlines a lot of what we do, try and make it easy to understand.
Can homeowners complete renovation on the home? So I know that we talked about they can upgrade, and is there restrictions on that? Do they have to get permission from Ourboro? Like what are the requirements around that?
Yeah, so I touched on the renovation credit piece, but when it comes to general upgrades, we want the homeowner to live in the property, take care of it as if their own. So general repairs and maintenance, it's their responsibility. You kind of agree to take care of the property. If you're wanting to make a material change, so anything we define as anything that's over $10,000 or anything that requires a permit, we do request that you get Ourboro's consent.
Okay.
And that's actually more for in your best interest to do so, because if it turns out that material improvement will actually increase the value of the home, then you can qualify for a renovation credit. We need to know about it in order to give you credit for it. But the reason why, kind of the asset protection aspect of it is that some people, you may think you're doing an improvement. I have 3 bedrooms. I don't need them. I'm going to turn 2 of them into a man cave or something. I mean, that's great for while you're there, but we can at least give you the advice saying listen, this may not be great for the long-term value. We may not flat out reject your proposal, but at least you go in knowing that you're not actually increasing the value of the home.
Yes. I think that it's super cool because your interests are similar. The idea is that we want to grow this property
Exactly.
and both be able to walk away winning. So it's just another set of eyes and
Yeah.
another kind of filter to go through to ensure that
Yeah.
our home buyers are making the right decision for the long-term
Yeah,
investment.
exactly.
which is
And we
very
want
cool.
you to enjoy the home while you're there. So we're not like knocking on your door checking. We do actually, we offer a complimentary home maintenance program too. So for properties in the GTA, one of the things that we offer is a partnership with a company called Caboodle. So our homeowners, if they opt in, it's totally free for them. We pay for it. They get semi-annual home maintenance visits. So they get home maintenance checkups. Like there's a list of things that are going through. So it kind of puts home maintenance on autopilot, and we've gotten lots of great feedback from our buyers on it. So that's just one of the ways that we try and help out homeowners and take some of the stressful points out of home ownership.
Very helpful. Next question. Can sellers continue to work with Ourboro after their successful sale?
Yeah, so if you co-owned a property with Ourboro, you sold it, can you use this again for your next home? Sure. I mean, there's nothing preventing somebody from doing that. Obviously, like we would love it if you co-bought with Ourboro, sold the property, and then had enough equity from that sale to buy a property on your own, because that's the dream, right?
Yes.
To own on your own. But of course, like practically speaking, that might not always be the case. So yeah, we don't prohibit buyers from working with us a second time.
All right, now let's assume that we have a Ourboro property that's been listed. It's kind of gone through the market. Will Ourboro ever come in and force the seller to take an offer or to reject an offer? Like, what is Ourboro's voice in
The selling process.
the negotiations, accepting, rejecting, countering? Does Ourboro have a voice in that process?
Yeah, that's a great question. So the selling process is quite procedural. It starts with the homeowner giving us notice of their intent to sell and kind of almost like giving us the first right of refusal,
Okay.
right? So they give us intent to sell and they kind of send us their target price. So we have the options to say, okay, if this is the price you want to be sell at, do we want to buy it at that price? That's just kind of for our protection. And that's only because, and a number of things for our protection, is especially to kind of avoid people taking advantage, saying like, oh, I want to sell my property, but I'm going to sell it to my uncle for $2, you know?
Right.
So it's like for us, it's sort of, if you're willing to sell the property, so long as it's fair market value, it shouldn't matter who you're selling it to. So there's a few procedural checks and balances in place that kind of govern the sell process. But generally, once a property is listed, like it's listed on the market, then it's free. It's traditional sell process. You know, third parties can come make an offer, and Ourboro does have some rights in there if an offer is like super low, right? But like I said, there's some details and nuance there. But generally speaking, it's very vanilla.
Okay. Those are all of the formal questions that we had planned for today. I'm going to put you on the spot with one added.
Sure.
What is in the works for Ourboro? So you talked about expanding regions, but can you give our audience any sneak peek?
Homes for everybody.
Yeah.
You got a home. No. We're growing very quickly. And so, you know, I mentioned being able to expand to Ottawa, but we certainly would love to be able to expand into other provinces as well. I mean, the housing affordability issue is not unique to Toronto and the GTA, like Vancouver. Like it doesn't stop there. There's no shortage of people who are locked out of the market. So that's kind of one of the big pieces in terms of market reach, but also like homeowner programs and services, right? We're now just growing. Our portfolio is kind of just starting to hit critical mass in terms of the number of buyers we have in our portfolio, or sort of homes we have in our portfolio. So then, like, one of the things I'm really excited about as head of product is just like, where can we go with that? What are the different services, partnerships that we can now offer our homeowners? Say like solar panels. Like if Ourboro wanted to be able to do a mass rollout and offer solar panels to our homeowners, and we can negotiate really favorable, like less prohibitive pricing, like just things like that. That's on the horizon that we're really excited to roll out. And all of these things, you know, obviously have tremendous value to not only the growth of the asset, but also for the homeowners and their enjoyment of the property as well too.
That's very, very cool. We invite monthly a different guest onto our channel, and we chit chat about mostly things that can help our first time homebuyers and our first time sellers. And one of the asks that we have of our guests is to provide a free digital gift. Can you tell us what you're sharing with us?
It's a feature sheet around just how Ourboro works and what is home ownership, like co-ownership with Ourboro. So it's a quick 2-pager on the criteria for working with us, a little see the math, for those who are more visually inclined, the graphics of how we actually share profit, share equity at time of purchase, and then how that's distributed at time of sale.
If you are wanting to get your hands on this amazing gift, there's a link in the description box below. You can fill that out and it'll instantly go into your inbox. Additionally, you'll also see a link that if you would like to move forward with an application process, you can actually click that link and it'll take you right to the Ourboro application, and you can start the process as easy as that. This was amazing. I'm so grateful for your time and allowing us to take up some space in your office
great
today.
having you.
Yeah, this was so good. And if you enjoy videos like this one, we post an interview video once a month, but weekly we share tips and tricks and proven strategies to help you benefit through the real estate market. Thank you so much for watching, and we'll see you next week.